Good morning, traders. It's the 9th of February. We're Signal Centre talking bull. I'm Joe, joined by Steve O'Hare this morning. How you doing, Steve?
Yeah, pretty good, mate. Thank you.
Good.
Looking forward to another day of volatility.
Indeed. Okay, well, let's get on to the major headlines and what's causing that volatility, and then try and set us up for the day by looking at some charts from a technical perspective. So first up, in terms of headlines, we had the main event yesterday, which was the New York Fed President Williams speaking. He stated that the central bank still has some work to do to get inflation under control, although there is a lot of uncertainty over the inflation outlook. He also stated that the December dots plots were still very reasonable due to the totality of the data. He also warned that there will need to be higher interest rates if services prices remain elevated. Williams was broadly optimistic over the economic outlook, with demand still very strong. So the Fed guys continue to peddle really the same message. So no real change there. In terms of what's happening with the ECB, one of the council members there stated that headline inflation seems to have peaked, but his main focus was on the underlying inflation. If underlying inflation does not materially abate, the current pace of rate hikes may needed to increase into May. He added that the ECB will move to smaller steps once the bank sees a clear and decisive turn in the underlying inflation dynamics. Now, really, it's a case of all eyes on the inflation data, really, for the US next week. So we are likely to see markets kind of go into a bit of a holding pattern ahead of that. There is going to be caution ahead of it. The overall market tone yesterday was more defensive, with reservations over Fed policy and caution ahead of next week's CPI inflation data. The dollar index overall was little changed as it drifted from its intraday highs. This morning, we've had some house price data out from the UK. The RICS housing data reported that a net 47% of surveyors reported declining house prices for January from 42% previously, which is the lowest reading since 2009. Comments from the Bank of England Governor Bailey and other MPC members to the Treasury Select Committee will be closely watched today. We've got UK GDP data due out on Friday. The latest UK GDP data is due, with expectations of a 0.3% contraction for December, with expectations that the fourth quarter GDP will be unchanged. And we've also seen some further central bank action from the Swedish central bank. They will announce their latest policy decision today, with consensus forecast for a further 50 basis point hike, taking overall rates to 3%. Okay, let's get into the chart, Steve. Let's take a look at how Bitcoin's shaping up today and what it did over the last 24 hours.
Yeah, quite looking forward to that GDP figure as well.
GDP, yeah. It's a plea.
It's a plea. Please don't be any lower. Anyway, let's take a look at Bitcoin, which traded quite nice technically yesterday. If you all remember, we highlighted this level of support, 22,314. Price action stalled at 22,378. So a mere 64 points away from this support figure, and bounced quite aggressively afterwards. We're trading about 300 points higher than that now. So it worked quite nice from a technical perspective, and for me, that is a really turning out to be a really key level on Bitcoin. So dip buying there seems to be the way to go. And until that breaks and we get a decent close below it, where we'll get that vacuum move, that very fast move lower to around about the 21,000. 250, 21,500 level, then we can remain quite positive on Bitcoin. Only short term. Don't forget that I'm the big bad bear who's telling you Bitcoin is going lower in the longer term. So let's move on from there before we get too much hate. Look at commodities. Gold has continued this little grind higher. We call it a grind because it looks to be a little bit forced at the moment. We are forming on a daily chart what looks to be quite a nice bearish flag, but remember, we've got this real decent trend line, a trend line of support, which has 4, 5, 6, well, multiple contact points. So a really solid trend line here, and we are continuing to sort of like trade above it and hold above it. And with these candles that we've seen over the last 3 days, very, very similar inverted hammer candles. Now they are quite quite a bullish candle really when it comes to the end of a trend lower. So think about them as maybe a hanging man candle at the top, where price action continues to try to get below the support, then rallies aggressively but fails, but still closes slightly higher. So we're seeing this like nice gradual uptick. There could be two things going on here. We could be forming, could be a bit of a bull trap, could be forming a big bearish flag. Look at this. This would look quite nice. This would have a measured move target all the way down to, we measure the flagpole. Oh, let's take that right extension off. And then we would take that and extend it down lower. Now that would have a measured move target just below $1,800, which is a huge level of support. If we remember back not so long ago, it was only mid-December we were down here. So and in that sort of interim period, we've been up to 1960. However, these candles are slightly bullish, as I say. So maybe this is the sort of we're going to get a twist in the dollar story yet again. Now a weaker dollar, which has pulled back ever so slightly this week, leads to a little bit of strength in the gold, which is priced against dollar. Remember that. So if we do get that rally back in the dollar, which has been quite oversold at the moment, if we do get that extended rally back, then we could get that breakdown right into resistance. I mean, it'll be a dip buying opportunity, so don't panic, all you gold lovers out there. But at the moment, we're just sort of like trading. It's a little bit of no man's land, so wait for the break either way, I think, on that. Silver, we're seeing similar sort of price action. If you look at it, actually, there's a different technical picture here. We're in the middle of the Ichimoku cloud, whereas on gold, we're trading well above it. You can see the cloud down here, the support's down here. Silver, different story, we're in the cloud, so it's slightly more bearish. And you can see this volume bar on the right hand side, which tells you a story of where we get the this sort of like volume traps, these like areas of sort of vacuum where we get aggressive price moves. We can see we had the break of 23.18 and the big vacuum move, which was a 1 day move down, and now we're at support, and you can see support coming in around about the 21.80 to $22 level, and below that as well. So silver's slightly different, but still overall it hasn't broken down below the 6th of December low, so it still remains. The short-term technicals look a little bit more positive on that. Taking a look at Brent crude oil, we got the oil inventories out yesterday. I don't think it was a great number. We saw a bit of a sell-off over the oil inventories, but we did, in the end, the daily picture improved. We've got the bounce on the 6th of Feb that mirrored the support we saw on the 5th of Jan, and bounced quite nicely from there. And we're looking to sort of like push higher again. So oil inventories, as I say, the figure wasn't good. Look at the hourly chart. You can see the spike lower just here, spike lower, found support, and bullish hammers, bang, straight back up again. So the oil picture looks a little bit more positive. Crude oil now trading at resistance, looking to break higher to target the bigger resistance around $79.80 to $80. So only a slightly bit higher. Brent crude oil, same sort of picture technically. We can see a bit of the makings of maybe an inverse head and shoulders formation, a bottoming formation here on the hourly chart, support below, trending higher, and again same sort of thing, resistance coming in around about the $86 level on Brent crude. Natural gas is, well, it did attempt to stage a bit of a rally. We were talking about this yesterday, but it looked like two real positive candles, and then they were wiped out. Another bearish outside candle, on the back foot again, natural gas. So the level to watch, $2.36. Overall, we're targeting a move from the head and shoulders pattern to 135.5. So natural gas on the back foot again, and not really a lot to stand in the way. Actually, if we take that, look, you can see where the sort of the real volume line comes in, and that's from that price action all the way back here, all the way back here. Yeah, so but the 135.50 Joe, still looks like a decent potential long-term target.
Yeah, absolutely. Okay, thank you very much, Steve. Let's kick on to the FX markets then. Not a whole lot happening yesterday, really. Pretty flat again, maybe just a kind of holding pattern ahead of these major numbers that are due out next week. So starting off with the dollar index, we can see that there has been a fairly decent rally from the recent lows that we posted around 101.30. We saw the piercing line pattern there. We saw the big bullish candle back that up on Friday, further gains on Monday, but then since then we've started to stall. Most of the candles kind of been inside the body of that candle that we formed on Monday. Short-term downtrend still in place here by this blue line. So ideally need to see a break above that before we can look for an extension of this recent corrective move. So all in all, the trend does remain bearish on the dollar for the time being, but I still think there is potential maybe for a higher correction, at least towards that 38.2% fib at 106.15. So we need to wait and see. I guess we're going to need a catalyst to get that driving higher. And at the moment, we don't have it and probably won't have it until we have this inflation data maybe next week. Let's take a look at Euro US dollar. Not expecting much change here either. As we can see, there was a break of trend. There was some support here at 107.36, and prices are kind of gyrating around that level at the moment. We posted a doji candle on Tuesday. Bit of indecision on Wednesday, trying to move higher today, up by 0.3% as things stand at the moment. So again, still think there is potential for lower prices here just to correct really some of these gains that we've seen. The 38.2% fib level would be the natural kind of corrective level that we're looking for down at 104.61. But in the short term, there may be advances potentially towards 108.85 to kind of test these levels again, the reverse side of this broken trend line before maybe a deeper decline could play out. Let's take a look at cable. We can see here that prices, again, last few sessions, small move to the upside, but really quite muted given these big candles that we saw published on Thursday and Friday last week. So again, maybe looking for a retest of these levels before a deeper correction lower, again, potentially towards this 38.2% fib level. Got these two arrows drawn on the chart in red, which indicate the potential of a double top pattern. In order to complete that, we would need to see a move through 118.42, but there's no immediate threat of that. But we'll keep it on there just for the time being in case it does end up playing out. Let's take a look at dollar yen. So we saw a breakout of this channel. We saw then a triangle pattern form and a break of that on Friday. We've seen a push higher. We've seen a fill of the gap, and we are finding some support around 130.56. So while that continues to hold, I think I would give it enough maybe rope to move down to 129.16. At which point then I would be expecting buyers to step in maybe and drive prices higher again towards that 38.2% fib level at around 136.66. So still got a bit of a bullish outlook on this, providing it holds above these support zones here that we have 129.11 to 130.39. Let's take a look at Aussie US dollar. That was quite interesting yesterday. So we have seen a break of trend here. And we've seen a retest yesterday of the reverse side of that broken trend. We've got major horizontal support here from these previous highs that we posted back in August. So Steve, you were selling that yesterday, weren't you? No, you were buying that yesterday. Is that right?
Yeah. No, yeah, I was buying that yesterday. Yeah.
Yeah. So we have seen a correction back, but the gains are being trapped by the reverse side of this trend line. We are trying to engulf yesterday's losses so far today. It looks to be the best performing pair out there at the moment, up by 0.69%, only being challenged by actually New Zealand dollar as well. So we'll come on to that in a second. So yeah, I still think there is potential for lower prices here, but potential for a rally into around 70.75 before maybe the sellers step back in and drive this lower again towards that 38.2% fib. We've seen some major sort of turning points in a lot of these trends, so now we're just looking for those to unwind into some reasonable corrective areas. New Zealand dollar versus the US dollar. So big area of resistance here around 65.13. Prices have stalled on a couple of occasions. We posted a swing failure on the 2nd of Feb. Prices then reversed sharply lower, attempting to rally today following a couple of days of indecision. But again, I think any upside is likely to be limited in the short term. My preference is for a deeper correction. But of course, in order for all of this to happen, we are going to need to see some strength in the US dollar, which is only kind of toying with us at the minute. No real follow through as of yet. Also, we can't rule out the fact that this potentially is a big inverse head and shoulders or big bottom pattern. But in order to complete that, we need to see a breakthrough 65.30. I think that's about it on the currency, Steve, unless there's any requests. I can't see any.
No requests, mate, at the moment. Everyone's sort of like still waking up by the looks of things. What's going on there?
Yeah, morning, guys. Those that are watching, thanks for the comments. If there are any markets that you'd like us to check out, post them up and we'll get back to them in a moment. But Steve's going to take a look now at the indices.
Yeah, let me have a look at, let's break it down. Let's start with the FTSE. In the start of the last hour, 8 o'clock, we've seen a nice little rally in most of the indices. So take a look at FTSE to start with. A new all-time high up at 79.35 in FTSE yesterday. So well done, FTSE, looking good. It did post a doji candle on the daily chart, which is not great, not what you want to see when you're sort of like long of an asset. But this morning we've seen a nice little push higher, so up and away. Nothing really slowing this down. We've got support all the way down around about 7,700, but in front of that we've got 7,800 as well, which we reacted off earlier in the week. So looking pretty good. Looking to take out yesterday's high and create a new high on the day. So FTSE looking pretty strong. DAX has already taken out last week's high, last Thursday's high today. And we can see, let's break it down. Let's have a look at the hourly charts. Actually, it might be a little bit more interesting because we're looking at short-term picture all the time anyway. But you can see in the last hour, we've taken out that resistance from last Thursday, the close, and been up to 15,610. And again, so on an hourly basis, above the Ichimoku cloud, so that's positive. The 4-hour chart above the Ichimoku cloud, again positive. Formed a nice little double bottom here on the 4-hour chart. That played out really nicely. We've hit the measured move target on that. Again, looking to buy dips in these markets at the moment. Brave man to sort of like get long at these levels because if you're sort of got some decent trade management, your stop is quite a long way lower, targeting higher prices. It's always good to have at least a 2-to-1 risk reward. You can get it wrong a lot more often and still end up making money. Dow as well, a nice little rally over the last hour. Things are picking up. The US looking to go with the Europeans and looking promising today. 34,163, we're approaching that resistance level. A few spikes above there, but overall this is heading into retesting the resistance on the Dow 30. Again, hourly Ichimoku supporting, 4-hour Ichimoku supporting. Dips been bought at these support levels, and we're seeing this nice reaction higher now. Again, same in the Nasdaq, looking really promising for the rest of the day. Resistance coming in Nasdaq 12,760 to 12,890 or 12,900. Let's round it up, and support really all the way down at 12,400. So we're a bit about mid-range of that. But as I say, last hour very promising indeed, and the same in S&P. 4,200 is the resistance level. A few interim resistance levels in front of that, but if we can take out 4,177, then that shows signs of a more promising picture, posting higher highs. The dips, this candle really was from Tuesday 7th. We saw that sort of like volatility. We saw the spike lower and then the aggressive rally. And as I say, 4-hour chart showing good upward trend on S&Ps. Quickly, Aussie 200 dipped below the 4-hour cloud, but bouncing back aggressively. China had a decent rally on yesterday, and we've closed on the highs yesterday. Bit of indecision over the last sort of 4 hours, but looking to push higher again. So again, this is formed a nice little double bottom on a short-term chart. That could be one for the gun-to-head trade idea, China 50, if we can do it. It's not the greatest market that because it's quite volatile and quite a wide spread. So let's see if we can do that on the Oanda gun to head in a minute. Hang Seng again, double bottom, neckline broken, 21,500, and looking to push higher. So looking quite positive. The Far East has woken up to the indice move we've seen from the Far West. Neckline, we're trading around the neckline on the Nikkei as well. So yeah, looking pretty positive on the indices again. Yeah, you heard it, Steve O'Hare saying indices looking positive. You can all
Time to
stand
go
up
short,
now.
guys. So, Steve, you want to get yourself prepped for the gun to the head. I'm going to take a look at Aussie CAD for Mark on TradingView. Has requested a look at that. So let's bring that chart up. Start off with the daily. So Aussie CAD, looking at the longer term picture, we can see that prices were grinding lower for a significant period of time, but we have seen a pretty decent corrective move to the upside in recent months, starting really in mid-October. The rally has come towards the 61.8% fib level and also these previous highs that we posted back in April. So that's a decent level there for a corrective move. And obviously we found some pretty stiff resistance as well. Eventually that led to a swing failure back in late January. And then we've seen a break of the trend with this impulsive move to the downside that was posted on February the 3rd. So that for me indicates a short-term turnaround and that we should be looking now for more of a bearish bias because it looks as though the corrective move higher has come to an end. I've got a line drawn here at 93.71, which I think represents a decent area to think about loading up on new short positions potentially. If we think about this from a risk reward perspective, if we were to sell into that level with stops above those highs, then we'd be looking to target a reasonable move to the downside over the medium term, potentially as low as 88.31. Let's just take a look and see if that marries up with any fib levels. So we've got 38.2, we've got 61.8, then we've got 78.6. So any of those really, well, anything beyond the 38.2 offers reasonable risk reward on the daily setup. So that would be my take on Aussie CAD. If we take a look at it on an intraday basis today, because obviously most of us are interested in trading in the shorter term time frames, we can see that there are a number of resistance levels that have formed here, and I've got them drawn on in black. And the reason they're drawn on, we've got a swing low from back here in January. We've got another swing low that was posted back here in February. Obviously, we broke through those levels. So they didn't really provide anything in the way of support on the way down. But now from the reverse side, potentially looking at a retest. So we've got a high here from February the 7th, trying to challenge that. So there's multiple levels here of resistance, which may cap any upside advances. So depending on where you want to target your entry point, obviously the higher up you go, the better the risk reward. And in terms of where you place your stop, typically in this scenario, I would always go above the high of the impulsive candle that actually created the breakdown in the first place. So that would mean I'd need to go somewhere around there. And therefore, I'd probably be looking for the highest entry point just so that my risk reward is improved. And obviously, we're going to target and move back down to the lows. Then you're looking at around 2.27R as a risk reward ratio on Aussie CAD, but my bias is bearish. Arguably, you could say this was a double top as well. In the shorter term, we can get those two arrows drawn on there. Obviously, they don't necessarily have to line up next to each other. What we can also do is take a measurement from that double top to the neckline of that pattern and project it lower and actually improve our potential targets. That suggests that prices may go down to 91.96, at which point the risk reward improves quite substantially to 2.86R on Aussie CAD. So hopefully that was useful. Just my take and my opinion on how I'd potentially look at trading that market at the moment. Okay, Steve, let's move on to the gun to the head trade. So this is where Steve and I pick trade ideas live on the video or the stream in the hope that we can turn a profit between now and 9 o'clock UK time. So we don't give ourselves much time or much thought goes into these. It really is if we did have a gun to our head, what would we trade right now? Each of the ideas must have stops and targets. They're all placed at market, and we're now doing this on a live basis since the start of 2023. So yesterday we had a couple of trades. Steve, as already mentioned, was buying Aussie dollar, looking for higher prices. It reached highs of around 69.85 yesterday, and then I think we posted around 11 consecutive negative candles in a row on the hourly chart, but it has reversed pretty sharply overnight. So bit of a mixed bag on that at the minute, Steve. And so unfortunately we were stopped out on that. We did have another trade on sterling CAD. Both of these are posted up, by the way, to our TradingView profile. So if anybody wants to check them out, you can do so, and they're all time stamped. So we had a bit of a win on this, around about 0.75R. Bit of a grind to the upside. Looks as though it still looks pretty healthy and could potentially eventually go on towards that target that we got at 163.46. But those trades have been closed now, line been drawn under them. We get to reload the gun and go again today. So Steve, have you got anything that takes your fancy today?
Well, I feel a bit quite positive towards indices, and I mean, the one real punt I wanted to do was this natural gas, but because it just feels I've tried multiple times to try and buy the dip here, and it hasn't worked. So I'm going to leave it alone. See, I mean, it's just bounced again, but it's just formed a new low. Looking at the indices, there's already been some decent moves in the indices over the last hour, so it feels like I'm getting in a bit late there. The one indice that hasn't really had as much of a move, it's only up 0.14%, so it's the worst performing indices at the moment, is the Aussie 200. But the real thing I like about it is it's currently trying to break through the cloud on the hourly chart, just poked its head above it there. And also the 4-hour chart, it's forming a bullish engulfing candle, and that should complete at 10 o'clock. So maybe that's the one to get on. So I'm going to go with Aussie 200, just for it. It's basically bounced off support and just a little bit slow to catch up with the other indices, I think. So let's take a look at it from here. I'm going to put the trade on, trade, create new order. We're going to buy at market as we do. Stop loss, we're going to risk 1%. So let's think about, and the thing I like to look at is the average range of most of these markets. The average range for Aussie 200 in a day is about 70 points. So, you know, I'm not going to sort of like set a target of like 250 points or something. I'm going to be disciplined, like I've said before. So let's try and we want to try and see where we're going to place the stop. I mean, 74.30. You can see 1% risk, £19.30 we're risking, and target wise we want to look at a 2-to-1 risk reward really. So if we look at say 80 ticks, that's not an unreasonable amount to look for. So there we go, we put that trade on. It's that comes in at the highs we saw on the 3rd of Feb. I mean, to do that in a day, you'd need something special, I admit. But stops at the right level. Yeah, stops at the right level. We're £1.27 offside. It's the £18.13 loss. That works out, I think. But yeah, that's what I'm going for, Joe. A very fumbled Aussie 200 trade.
Okay, let's see how it goes. I'm going to take a look at New Zealand dollar versus the US dollar. Let's just get the daily chart up first of all for some context. So this is actually the best performing currency today. So it's already had a pretty substantial move of nearly 1%. But we do have this major level of resistance here. We had this swing failure that we posted on the 2nd of Feb. We've seen the break of trend. And for me, although this is a decent move to the upside, I still favour the bearish scenario on this and do think that gains eventually will be capped. Looking at this on an intraday basis, I'm looking for reasonable levels to target. And if we look to the left-hand side, we can see a previous swing low from the 19th of January. So I'm now expecting this level to act as resistance. The short-term fib level from the highs on the 2nd down to the lows that we posted on the 6th, we've got 38.2% level pretty close by. If we look at price action right now, we can see there's been a pretty dramatic move over the last few hours, which really started around 1 a.m. this morning. So we've had 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row. I'm going to sell into this. It's highly speculative because it is ripping to the upside, but we're into some pretty decent resistance levels. So I'm going to go with that. And now, in order to set my stop, I wanted to take a look at the average true range of this market over the past 14 periods and what the average range has been. We can see if we hover over the current candle that that's around 13 ticks. So I'm actually going to go with a stop loss that's 2 times the average true range of that period. So going to go with a 26 pip stop loss, which goes there. And I'm going to target a pullback to the support levels that we've got down here. So I'm selling at a current price of 63.66. If you can get that on for me, Steve.
Sorry, I was typing away there, Joe. What were you looking at?
New Zealand dollar, US dollar.
US dollar. Yep.
Selling at market.
Look at
Stop
you,
loss at
rebel.
63.93. Let's round that up.
Yeah.
And a target at 62.70.
62.70.
Risking 1%.
Risking 1%. There we go. We got it on. You got in at 63.65 and 63.93 stop, 62.70 target.
Perfect. Okay,
Look at
so we're on
you
that
going 3
risk.
to 1 round.
Yes, around 3.5 to 1. So let's see how that plays out. No,
nice one.
Could do with the nice winner. Okay, so there's 2 trade ideas. We'll get them published up to our TradingView profile as well. So there'll be timestamps. Everybody be able to check them out. They are being traded live as well via TradingView and our WANDA trading account. So we'll come back and check how those do tomorrow. And as mentioned, they will be closed out at 9 p.m. UK time, regardless of the outcome, unless, of course, they are stopped or hit their target prior to that time. Okay, day ahead, let's look at the information that we have out today. So 9:45, in just over an hour's time, we've got the Bank of England Treasury Committee hearings. So that could have an impact on anything linked to sterling. So keep an eye out for that. 1:30 UK time, we've got the US jobless claims. That's a weekly data point. Can be market moving at times, but I think really it's a case of now the market's waiting for this CPI number next week in the US. Maybe looking for the UK GDP number tomorrow as well. That could have an impact on sterling. It's going to happen pretty early on in the session. I think it's 7 a.m. UK time that number will come out. So could be in for a pretty volatile start tomorrow morning on some sterling-based currencies. Okay, thank you everybody for watching. Thanks for your comments. We very much enjoy them and welcome them. So if anybody's got any markets they're looking at, not necessarily today because we're finishing up, but tomorrow, please feel free to post them up and we'll do our very best to cover as many markets as we possibly can. Okay,
yeah,
Steve,
I'd say we always appreciate criticism, you know, as long as it's constructive. If it's not, we just block you.
Yeah. Keep it clean. Okay.
See you later.
Thanks, guys. Bye-bye.